Stocks fell again on Thursday, with equities unable to shake a three-week market rout under the weight of new tariff threats from President Donald Trump. The S&P 500 dropped 1.39% to settle at 5,521. The index officially ended the day in correction territory, more than 10% off its record high close. The Dow Jones Industrial Average fell 537 points, or 1.39%, marking its fourth day of declines and closing to 40,813. The Nasdaq Composite shed 1.96%, with shares of Tesla and Apple much lower. Trump went to a social platform on True Social on Thursday to threaten 200% tariffs on all alcoholic products coming from countries in the European Union in retaliation for the bloc's 50% tariff on whiskey. He said this will be great for the wine and champagne businesses in the U.S. Trump later remarked that he wouldn't be changing his mind on a broader group of tariffs set to be implemented on April 2nd. The disorderly rollout of Trump's U.S. trade policy has rattled markets this month, with investors worried it was pressing corporate and consumer confidence. The losses have intensified this week. The S&P 500 and Nasdaq are respectively on track for losses of 4.3% and 4.9% for just this week. The Dow is off about 4.7% in this period, tracking its worst week since June 2022. The Nasdaq was already well in correction territory heading into Thursday's session and now sits more than 14% below its recent record. The small cap index, Russell 2000, is even worse, approaching officially a bear market, down almost 20% from its record high. On Wall Street, corrections are defined as losses of 10%, and bear markets are drawdowns of 20% or more. These tariff wars are intensifying before they're abating. It just adds to the unpredictability and uncertainty, and that's a negative for stocks, obviously, said Jed Ellerbrook, portfolio manager at Agent Capital Management. On Thursday, Treasury Secretary Scott Bessent said that the Trump administration is more focused on the long-term health of the economy and markets rather than short-term movements. He said, "I'm not concerned about a little bit of volatility over 3 weeks." Stocks fell despite some encouraging inflation signs. February's Producer Price Index, which measures the cost of producing consumer goods and is a good indicator of inflationary pressures, was flat that month, compared with an expected increase. This follows a softer than expected February Consumer Price Index reading. The market strategists have been watching for a technical bounce after the recent sell-off. Some say the latest inflation data isn't likely enough to lead to a sizable rebound. Concerns over Trump's trade policies remain a key hangover on investors and consumer sentiment, and they throw into question how the Federal Reserve may proceed on interest rates.